Nobody's blaming the normal boogeyman like Larry Fink, Jamie Dimon, or Jane Street for price suppression. There could be someone within Bitcoin that's been pushing the price down that we really didn't expect. Let's start with this cryptic tweet from Michael Saylor here to kind of set the mood of what's going on. And this will really give you maybe the broad idea. And it really leans into what I've been saying the last couple of days. It seems like Michael Saylor himself is the only person holding up the Bitcoin price. And we might have just seen some more confirmation of this. So what am I talking about? Obviously, I'm sure you guys saw this. This was on March 4th. Again, note the days here. Note the timing of this. So on March 4th of this year, Michael Saylor tweeted, "We can buy more Bitcoin than they can sell." At the time, obviously, we all kind of read this as, hey, what's the other meme? Actually, I can't say it. It's too early in the show. How do I say it without saying it? We could say more idiotic and buy Bitcoin than the amount of people selling Bitcoin. We will buy the Bitcoin at any price. We want the Bitcoin. We want to accumulate the Bitcoin. So I think that's how most people read this, is like, yeah, dump on us all you want. Obviously, we had the October dump. We had the November dump. We got a 45% discount on Bitcoin. This is, I think, in the spirit of what this tweet was embraced as. It's like, yeah, give us the Bitcoin. We'll keep buying it. That's all that matters. But after the news this morning that came out, it starts to bring on a whole new light. Who exactly was Saylor talking about when he did this tweet? We can buy more Bitcoin than they can sell. Well, we're starting to see what is going on in the markets right now. Hence why I've been saying the last couple of days, it looks like Saylor himself might single-handedly pull us out of this bear market. He might himself, with the amount of capital, the amount of money that he's buying Bitcoin, with the amount of Bitcoin that he's buying, again, if he's really buying actual Bitcoin, which I can hear you guys saying, he might be scooping up all the coin himself. It seems like Saylor, or rather Strategy, is the single largest buyer in the market right now. So going further, we got this tweet this morning. It's super interesting. We have Mara tweeting. Today, Mara, or Marathon, announced the repurchase of $1 billion in convertible notes at a roughly 9% discount par value. Roughly 30% convertible debt reduction, roughly $88 million in value captured, zero future dilution exposure on the retired notes, funded through Bitcoin sales, not an ATM. So let's look at the press release. Here we have the press release from Marathon Miners, again, a huge public Bitcoin mining company. And before today, they were the second largest Bitcoin treasury. With this announcement, with this verification, they are sliding down on the Bitcoin treasury list, the leaderboard of who owns the most Bitcoin. Here is the headline, or the name of the press release. It goes, Mara Holdings Inc. announces a $1 billion repurchase of 0% convertible senior notes due 2030 and 2031, and sale of 15,133 Bitcoin. So when you look at this, it really goes into what we've been covering. I think it was last week, or maybe it was the week before, that a lot of the sell pressure we have seen, at least in the year of 2026, has been from these public Bitcoin miners. They're selling a lot of Bitcoin to pivot into AI because profitability in Bitcoin mining, it has been getting a lot tougher. And now with the AI hype, with kind of this whole idea that AGI is coming, AI is taking over the world, we're seeing a lot of Bitcoin miners transition into AI using the mining infrastructure for data centers. And this has been a trend that's been going on for the last couple of weeks. I think since 2026, we've seen, tens of thousands of coins sold from these public Bitcoin miners so that they can raise capital to build out their AI infrastructure. It might be a little too late. But again, remember what Saylor said. We can buy more Bitcoin than you can sell on March 4th. Now, let's look into this press release a little more, and you start to see an interesting connection here. I highlighted the one point. I'm not going to read the whole thing because, they're selling Bitcoin so that they can raise cash, so that they can use that cash to transition into AI. Now, here's where it does get a little interesting. The company, Marathon, announced today that between March 4th and March 25th of 2026, it sold 15,133 Bitcoin for an aggregate sale price of approximately $1.1 billion. The company expects to use the proceeds from the Bitcoin sales to fund the notes repurchase transactions, with the remainder available for general corporate purposes. So Saylor tweets March 4th. We can buy more Bitcoin than they can sell. At the time, we were all thinking, hey, maybe this is just the OG selling. Maybe this is Wall Street selling. All right, cool. We're getting a good discount on Bitcoin. We'll buy all the Bitcoin. Now, this cryptic tweet seems like this might have been just a straight shot at Marathon, being like, look, maybe he knew something behind the scenes that we didn't, knows they're selling a bunch of Bitcoin. And he's like, we're going to buy that Bitcoin. Now, the interesting aspect of this is that shortly thereafter, Saylor did a huge buy. Shouts out to David Lawrence. He goes, look, he quotes that sentence. Meanwhile, on the 4th, the day that they started selling their Bitcoin, Saylor does the cryptic tweak of we can buy more Bitcoin than they can sell. And then on Monday, March 9th, Strategy comes around and announces they have bought 17,994 Bitcoin for $1.28 billion. As this tweet goes, the message is very clear. If you don't want your Bitcoin, Strategy will buy it all. And as he notices, which is super bullish for MicroStrategy. Now, in the context of this video, we have been seeing, especially at the tail end of 2025, and the beginning of 2026, a very interesting phenomenon happened. Obviously, when Bitcoin hit all-time high in October at 126, the rationale for most people when we started dropping was, 100K was the price point where OGs are very willing to realize some profits. And further, towards the end of last year, we also got, I wouldn't necessarily call it regulatory clarity, but we got bank clearance now and Wall Street products where the OGs could use their Bitcoin in various forms to get some various fiat benefits, use their Bitcoin or rather sell some Bitcoin or transfer some Bitcoin into ETFs. They get some tax benefits. We're starting to see, obviously, JP Morgan announced that Bitcoin is going to be used for collateral. Maybe that's what they wanted to do. Maybe they were just selling out because they thought 4-year cycle was here. 126K is the top. I want to realize some of these gains. I don't want to ride the roller coaster anymore. I can't actually ride another 80% drawdown. I want to realize some of my wealth. That was the narrative at the end of 2025. It's the OG selling. Remember, the idea of Bitcoin at 100K is essentially like an IPO. That the Bitcoin project has gone from the innovators, from the real Bitcoin pioneers, to now it transitioning into a more maybe late stage, early adopter, early majority era. And that's when Wall Street is coming in. Their starting price is 100K. So we are seeing kind of a changing of the guard from the original ideologues in Bitcoin to a more investor Wall Street kind of perspective where it's just an investment. And that was the narrative that we were all kind of comfortable talking about at the end of 2025. Now, since the beginning of 2026, we have seen a whole new round of selling, and now it's coming from the public miners that seem to be pivoting towards AI. So we've been asking, we literally asked this yesterday, who is selling Bitcoin right now? It's 45% off all-time highs. There's not much liquidity. There's really nothing in the market that makes people feel the need to sell their Bitcoin. There is no black swan panic. Actually, we've had a bunch of black swans, and that's why we're at the price we are today. But it's starting to look like the pivot from Bitcoin mining infrastructure into a more AI data center is really taking a very, very quick turn. I think they're trying to do this as quickly as possible because I think they're trying to capitalize on the AI hype. But further, again, Bitcoin mining is one of the most competitive industries, period, in the world. There's not that much margin on Bitcoin mining unless you're getting free energy, or maybe black market energy. But if you are paying for energy like most normal people, even if you're getting a good deal, there's really not that much profits. And then going further, if you are a public company, you have to deal with the shareholders and they want to see a quarterly return. So you're seeing the dynamics here where, and remember, we had Kent on and he was saying, look, we are seeing this pivot. We are seeing public Bitcoin miners have some issues right now, not necessarily huge issues, but they are starting to get a little nervous. They're starting to get the heat here that, hey, we got to figure out something that's going to be more profitable for these huge infrastructure that we built out. And right now, it seems like all the rage is the AI. Now, personally, if you watch the show, you know my view here. I'm not the biggest AI guy. I do kind of believe it's an AI bubble. But AI is a part of our lives now. If you're on Twitter, you see it everywhere. If you're on any social media, everything is AI, though we are starting to see that maybe open AI. Is it open? Yeah. ChatGPT, basically, the mother company of ChatGPT. I think it's OpenAI. I'm blanking right now. That they are starting to potentially run out of money. Now, I think they have a lot of money because all the hype is in AI right now. It's all of the hype. We're seeing that the Trump administration is adding a, what was it called? Discovery Science Board, and it's basically like all the AI guys. So there is a huge pivot in AI. I think anyone that is aware of where technology is going, they're probably focusing on two things. It's AI and it's Bitcoin. Now, AI gets a lot more coverage, hence why I think we're seeing a lot of the public Bitcoin miners pivot into AI. But in the last couple of months, we've seen a lot of these public Bitcoin miners. If I remember, it was about 6 of all the big public companies, Bitcoin mining companies, all announced the same kind of plan. They're going to sell some Bitcoin so that they can raise some cash so that they can pivot into AI. Now, this trend is continuing. So when you ask the question, who is selling all of the Bitcoin? It's not necessarily just, you and me or your uncle or anyone on Main Street that's really being afraid and shaking out of Bitcoin. At this point, I think it's very safe to say that most people in Bitcoin aren't tourists here. And that term tourist is a little derogatory, but it's just people that are true believers. It's people that see the long-term gain and the long-term impact of Bitcoin. Whether that's institutions like the Wall Street, entities, like all the big banks, like nation states, like sovereign wealth funds, or just individuals or corporate treasuries. The people that are currently in the space, and I would consider the Bitcoin mining companies in that category as well, though they're obviously making moves to secure their business here, their business plan, their long-term longevity here. We are seeing that the majority of the selling is coming from the public Bitcoin miners. That's where it's coming from, and it really makes me think. Nico and I have had this argument on the show, and it's just a Simply Opti today, guys, so you guys get spared a little bit on the bearishness. But we have been having this argument for the last couple of weeks, or rather probably months, that we may be in for another leg down in this bear market. Personally, I'm getting a little more optimistic. I am drawing some lines here. I'm starting to see a little trend build on the daily in Bitcoin price. The Bitcoin price did pull back exactly to the trend line I drew 2 weeks ago. But there's still this conversation of we need one final capitulation before we can finally move on and go into the upward trend of the bull market. But when I see this news from public Bitcoin miners selling tens of thousands of coins, and particularly Marathon, I'm wondering, is this the final capitulation? As the heuristic goes, as the meme goes in Bitcoin or amongst Bitcoiners, is usually to mark a bottom, you need a final sacrifice. Historically, it's been exchanges blowing up. It's been exchanges being insolvent. It's been huge liquidations, shorts. Like usually it happens in liquidations, forced liquidations where we find someone with no clothes as the river pulls out or the ocean pulls out. Again, you guys know I suck at euphemisms. It's crazy. But right now, this news this morning it's starting to make me think that maybe the capitulation that we are kind of waiting on might be already happening. It might be coming from the Bitcoin public Bitcoin miners. They're selling tons of coins, and the price is holding on very good. Now, as I've been making the case, and I saw someone, I think it was Moonshine Fuel in the chat, said maybe Opti is right. Maybe we are just going to go sideways, and then we're going to start doing another leg up, and we're not going to see a quote unquote. Wait, sorry, someone made fun of me. Quote unquote. I guess I said quote unquote. Quote unquote. Quintessential bear market where we get a blow off top. Bitcoin price corrects 80%. We get a final capitulation leg down for maybe a couple of weeks. And then as we kind of reset the sentiment, we start to build back up. But what is different now? And that's kind of what I've been harping on. It's like, yeah, okay, look, the 4-year cycle played out almost to a T in terms of timing. You could argue that everything else around the 4-year cycle is broken, but that's for another video. That's for another debate. It's not fun to debate with myself, but just taking that as a given, 18 months after the halving, we got an all-time high. That happened. October, we got 126. Now, we're all expecting, or at least we're expecting, an 80% drawdown. Kind of where we are. It'll go down, 40, 50%. It'll go sideways, and then we'll have one final capitulation leg, as we saw in 2021. I think a lot of us have PTSD from the 2021 cycle because we didn't go as high as we thought we were going to go, but we definitely got an 80% drawdown. The price was brutal. It drew down, kind of maybe almost held, and then it rolled off a ledge, and we saw a final leg down. Now, that could still happen. But trying to think through what we're seeing right now, a few things have changed. And I'm not saying that this time is different per se, but things have changed. And what are those huge changes? Obviously, we have the U.S. government embracing Bitcoin. We have regulatory clarity at least being discussed on Capitol Hill. We're seeing other nation states follow suit. We're seeing central banks acquiring Bitcoin. We're seeing sovereign wealth funds acquire Bitcoin. And we're seeing extreme amount of interest coming from Bitcoin treasuries, and in particular, MicroStrategy and the stretched product. So I think all of these factors, we do have to take them into consideration. And plus, I didn't even add, we're seeing banks and Wall Street start to finally embrace Bitcoin. And as some of the data has been showing us, 2025 was the year that Wall Street, or the institutions and the banks and the hedge funds, really probably just started to research Bitcoin. Because remember, 2025 was just, it's the single year that all of the banks can now finally get into Bitcoin based on all of the red tape being cut. It doesn't mean that they were instantly going to go into Bitcoin. It just means that now they're finally going to unleash their, not their wealth advisors, their research analysts to understand, should we be buying this thing? Is this thing going to be a long-term viable investment for our customers and ourselves? So 2025, as much as we would like to see them move very quickly, you could still argue that they did move very quickly. Because now in 2026, the conversation is no longer, oh, do you own Bitcoin or do you not? The conversation is, how much exposure should I get to Bitcoin? And how quickly, and not just quickly, but how strong will the U.S. government embrace Bitcoin? It's no longer this idea that you can ignore Bitcoin. It's more of this idea of, like, how do we actually embrace Bitcoin? It's no longer a conversation of theoretical, what is Bitcoin? Is it got a place in my portfolio? It's more of a conversation of action. How can we actually partake in this industry, in this new asset class? So that's why I've been making the case and the thesis that I'm not going to say this time is actually, I have said it. I'm just saying there's different variables now. And some of those variables, I think, are really, adjusting how things are playing out. And the main one is obviously the amount of FOMO and interest and fervor that we're seeing from Michael Saylor in terms of buying Bitcoin. So if Saylor literally, without raising the $42 billion that he plans to smash by with Bitcoin, is the only person kind of holding us up. Obviously, there is a lot of speculation. There's a lot of rumors that there is nation states and sovereign wealth funds doing an unlimited, almost silent bid here, kind of like a DCA, but it's really more of a time-weighted, algorithm buy, a TWAP, where they just buy a little bit of Bitcoin consistently throughout the trading day. And it happens every single day, for the week. Might stop on the weekend, but they're just continuously trying to buy just little bits of Bitcoin so that they don't move the price of Bitcoin too much. And that's only if they're buying on the open market. There's also the OTC kind of idea that a lot of people might be buying chunks on the OTC as to not move the market. But Saylor himself is, kind of doing both things. He's just smash buying billions of dollars. So one entity. And again, as I was saying yesterday, there is a conversation about whether this is a good thing, whether one entity should be buying, or rather, whether we should be applauding one entity buying 1 million Bitcoin for themselves and their shareholders. Again, that's a whole other conversation. But what we are seeing is that even if a bunch of public Bitcoin miners are selling Bitcoin and they're, skimming some of their treasury off, Saylor's literally buying that all just by himself. And that doesn't even account for the amount of Bitcoin that is released a day, which is probably being, bought up by other institutions and even Saylor himself. It doesn't account for the fact that he just is going to raise 44 billion. Well, really, it's 42 billion to buy Bitcoin. Love or hate Saylor. It doesn't matter what your thoughts are on Saylor. I'm going to double down on the idea that I'm like wholly convinced that Saylor himself, he is, Sisyphus here. He is holding the entire market up just by his buys alone. Saylor's the one scooping up all this coin. And as we've talked about, he will totally be vindicated. Maybe not next year, but in a few years, it will become very obvious that what Saylor did in this bear market, it's going to go down in history. So anyways, I did bring up that we will look at the Bitcoin Treasury leaderboard. So here is the recent move and what it actually means. So of course, strategy way ahead of everyone. I doubt anyone's ever going to catch up to strategy at this point, especially when he's going to buy another, 2 to 600,000 coins. He's going to very clearly be in the lead. Next, as of today, was 21 Capital with 43,514 coins. Now, 21 Capital has been very quiet lately. I've seen a lot of people pushing back on Jack Mallers on Twitter. Like, what are you guys doing? When are you going to announce some more buys? I would never bet against Jack Mallers. I'm sure we'll see something interesting come out of 21 Capital soon. Yes, the stock is hurting, but I don't think that they're just going to go quietly into the night. Like 21 Capital is going to make a move. But currently, Mara Holdings or Marathon, they're at number 3 with 38,689 coins. And they were, as far as we all knew, yesterday in the number 2 position. But as you can see, since March 4th, they've been selling 15,000 coins. And so let's go into Mara's holdings here. As you can see, as of today, these are the updated numbers. They have 38,689,000 Bitcoin with a market cap of 3 billion. And doesn't this usually have their holdings here? But anyways, we'll go here. What's this date? March 26th, or sorry, before we all knew, yesterday, March 25th, 2026, they had 53,822 Bitcoin, roughly valued at $3.8 billion. As of today, when we all heard that they've been selling, they are down to 38,689, roughly $2.7 billion. So they sold, what is that? $1 billion. The market's eating it up. Bitcoin's going sideways. Bitcoin in the face of a Middle East conflict, war, operation, whatever you want to call it. And Bitcoin, it did pull back a little bit, but roughly at 70K. I think part of the bigger conversation here is what I've been saying and what was really surprising me about 4 weeks ago now, or I guess 3 and some change, is that when the markets open on that Monday after the initial attack in Iran, was that Bitcoin didn't go down. And this is why I am bullish right now. Yes, a part of me, my gut is still saying we're probably going to go down. Maybe it's the PTSD from the last cycle in my head being like, we're going to see another final leg. Every time I start getting optimistic and bullish is right when we get kicked in the nuts and the price just caters on us. But it hasn't done that so far. It's actually been super resilient. I saw some people in the chats like Bitcoin's at 70K. It's down 45% from all-time high. How could you say that this is resilient price action? Because it's not going lower. That's the signal here. You would think any bad news would drive Bitcoin lower. We haven't seen that happen. So for all we know, it's not just Saylor in the market scooping up all this coin, though that's, a good narrative, a good headline. It's all the data that we currently have, but there could be other buyers in the market right now that are trying to build a silent position. We have speculated on the show in the past that maybe it's the U.S. government, though we're probably getting a little less optimistic that the Strategic Bitcoin Reserve will actually amount to anything. But in the face of all of this, the fact we're holding where we are, the fact we're seeing some of the biggest public miners sell a shit ton of Bitcoin, scientific term, a shit ton of Bitcoin. The fact we're seeing, again, scientific term, Michael Saylor buy a shit ton of Bitcoin by himself, the price is almost in equilibrium. And as you all know, if you've been in Bitcoin for long enough, supply-demand economics, the price isn't going up. It just means there's more supply than demand. Well, for all intents and purposes, the price, supply demand economics of Bitcoin, it's neutral. So the amount of selling we're seeing is equal to the amount of buying. Hence why a lot of people have been on Twitter like, yo, Saylor's buying billions of dollars of Bitcoin every week. Why isn't the price going up? Are they even buying real Bitcoin? Oh, they're buying paper Bitcoin. Well, I think now we kind of know for a fact that Saylor's just buying all the Bitcoin that is being sold from these public Bitcoin miners. Again, he specifically said it in a cryptic tweet. We can buy all the Bitcoin that they can sell. So maybe there is some inside baseball here. Maybe Saylor does know something that we aren't privy to from a mainstream perspective. Maybe these backroom deals, I wouldn't say backroom deals, these backroom meetings he's had is really giving him the FOMO. He's like, oh man, once all this selling stops, this thing's going to start ripping. Maybe, I really don't remember, and I was trying to think about Saylor putting his hat really into the 4-year cycle meme. I know he did say crypto winter's never coming, and then he followed that up, I believe it was about a month ago, saying crypto winter is starting to go into spring. Obviously, the connotation of a crypto spring. Hold on. Sorry, guys. I'm so cooked from the gym yesterday. I feel like I got hit by a train, and I don't know. I'm like raspy this morning. But anyways, Saylor said, crypto winter's almost over. We're going into a crypto spring. Obviously, seasonally, we are in springtime, where we just passed the spring equinox. So flowers are blooming. I'm starting to feel a little better. The sun's nice. The weather's great. But in crypto terms, in Bitcoin terms, a spring is when the price gets frothy. All I'm saying is once we get another announcement, another headline of someone coming into Bitcoin and wanting a lot of Bitcoin, I think all of our models, all of our heuristics are completely going to go out the window. Once the demand comes in, and I didn't bring it up on the show, but I did see another statistic coming from, I believe it was JP Morgan. Let me see. Actually, I'll pull it up. I have it in my notes over here, but I wasn't going to necessarily hit it. But I have been mentioning this to you guys on the show that we are seeing an interesting phenomenon happen in retail markets. Oh, and also, guys, let me check in the chat. Am I lagging? Because my computer Up to your high. We know. I'm not. Let me know if it's pixelated or anything, because I need to get an external hard drive. My computer is like on the verge of being cooked on me. So I'm getting all kinds of notifications. Okay, it was JP Morgan, and this was Walter Bloomberg, and it goes, investors flee to cash as uncertainty surges. Let me pull this up for you, which is very interesting to look into the psychology of traditional finance right now, which does make the case that once demand comes back into Bitcoin, once liquidity comes back into Bitcoin, I think all bets are off. But here we go. Investors are shifting back to cash in a move reminiscent of 2022, according to JP Morgan, as geopolitical tensions and policy risks rise. Strategist Nicholas, I'm not even going to try to pronounce your last name, bro. Nicholas P. says investors have been pulling out of equities, bonds, and gold since the Iran war began, boosting cash holdings instead. The shift reflects fears that central banks could repeat past policy mistakes, especially as energy shocks risk fueling inflation and forcing further rate hikes. Markets have already priced out expected rate cuts and are now anticipating increases in the coming months. While cash allocations have only risen modestly and remain low historically, they are still weighing on stocks and bonds. Meanwhile, equity positioning has dropped sharply from recent highs, signaling growing caution amongst investors, which is what I've been telling you guys. It seems like TradFi is sitting in cash right now. They don't know where they want to deploy their capital. Now, once we start seeing those market signals, they're going to start to deploy the capital. Now, what would those market signals be? As we kind of talked about yesterday, one would be the U.S. announcing they bought Bitcoin for the strategic Bitcoin reserve. That one's, I would almost argue, at zero. I guess it's a non-zero chance, just to be more optimistic, but it's low. It's like 1% at this point, at least from all the headlines we've heard. The other one would be some kind of regulatory clarity, or the Clarity Act passing, and I do have an update for you guys on that later on in the show. Now, if we do get that happening within the next month or so, maybe by the end of summer, 3 months, who knows exactly what's going to happen. I doubt it's going to happen before Easter, but at least that's what the conversation has been lately. Then we might see investors start to deploy some of that cash into Bitcoin. I don't know if they're going to go into equities. Depending on how long this war in the Middle East goes, I think people are going to be sitting in cash. They're going to be basically sitting on their hand because no one wants to go and put their cash into something and then the markets keep dropping. I actually had a story time. I was actually talking with my mother yesterday. You know, I called my mother. I haven't talked to her in a little bit. And she was making a joke about how, I forget what the app is, but she would throw like, I don't know, $50 at some kind of like Robinhood app where it just deploys capital, you know, just does little investments. And she's like, what the hell is going on? Like everything besides Bitcoin is down. And I'm like, in my head, I'm like, yeah, you should just be buying Bitcoin, Mom. I'm like, I am the Bitcoin guy. You don't, what are you doing? She's like, I have my DCA, but you know, I was just trying to play with a little bit in the markets. And she's like, literally all stocks are down. So I think that's what a lot of retail investors, a lot of what Main Street is seeing right now is equities are not in a good place. I was looking at, you know, Nvidia, it's looking a little toppy. You look at stocks, it's down. It's not looking that hot. Gold's down. The only thing holding up in the market right now, I would say, is Bitcoin. Hence why I was saying the other day that what if the decoupling we were looking at is not necessarily Bitcoin breaking out and everything staying flat, but what if the decoupling is everything goes down and Bitcoin doesn't go down at all or that much? This is where my head's at. This is what I'm looking at. But hey, we know where the selling's finally coming from, guys. It's from the public Bitcoin miners pivoting to AI. The AI hype is eating everything. The idea of AI will take all of our jobs is actually happening. It's just not happening how we thought it would. It's people selling their Bitcoin for AI, so we're just broker. And then we get our jobs taken from AI unless you have a trade. I always say, I don't think AI could be this regarded, so I might have a job for a little bit. But hey, I've been seeing some of the AI stuff. Maybe I can just program the AI and you'll never know that I'm not an AI. I think you'll know. We're not there yet. Anyways, there you have it, guys. The selling is coming from the public Bitcoin miners. It didn't stop, a month or two ago I think it was a month ago. It didn't stop a month ago when we covered this story. It has continued. I wouldn't be surprised if we see other Bitcoin public miners selling more Bitcoin to pivot into AI, to raise some cash to go into AI. It did seem like this story was like it happened in the past, and now we're hearing about it. But since that initial story broke, we're seeing more Bitcoin miners sell Bitcoin. Again, is Marathon skimming off their Bitcoin treasury the final capitulation, the final sacrifice we need for the next move up? I know we're so used to a very huge, explosive capitulation, an explosive sacrifice, but maybe this is it. I don't know. I want to believe, guys. We're a broker. We're a broker. Let's see. This is a good one. Stocks are not that high relative to M2 money supply. That goes up every second of every day. Facts. Oh, guys, have you, and I haven't brought it up on the show, but have you guys watched the Mag 7? They're cooked. Now, obviously, they're not falling off a cliff per se, but if you look at the Mag 7, they're not doing so hot. And the idea that the Mag 7 is the only thing that's been holding up the stock market, well, that correlation has seemingly broke, because Mag 7 has been going down, and stocks indexes like the S&P 500 and QQQ have continued to go up. Well, relatively gone up. So things are interesting, to say the least. Things are interesting. And from my opinion, Bitcoin going sideways at 70K, I think that's a lot of signal. I know you guys always say and yell at me like, oh, you guys are fiat maxis. All you care about this price. This is a free market of money. The price of things is signal to the market. We're not talking about necessarily just the value of a per Bitcoin, but the price sends a signal to the market, which gives investors information of where they should be deploying their capital. The fact we're at 70K or a little under 70K right now, I think that's all the signal we really need. Bitcoin's holding up very well. Anyways, keeping this moving. Oh, guys, I'm pretty excited for today's numbers, even though I really don't even know what he's saying. But Peter Schiff came out with another classic soundbite. And then I do have a update for you guys in the Clarity Act. And then in the culture, to wrap up the show, I want to talk about Bitcoin media in general. I was thinking about this idea this morning when I was coming to work. And I don't know, I'll flesh it out with you guys, just the idea of media literacy around Bitcoin and stuff. And so that's going to be today's show. I'll be right back after this commercial break, and we are going to dunk on Peter Schiff a little bit.
Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates, instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They are also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store.
Sorry guys, the chat really doesn't like Peter Schiff. That's funny. Okay, so the current Bitcoin price is $68,970. Again, we did retrace a little bit. Actually, you should we chart boy? Should I chart boy a little bit? No. I'm not going to subject you to my chart boying unless you guys want it in the chat. One's in the chat if you want some chart boying. Anyways, the discount from all-time high is currently 45.3%. The market cap is 1.38 trillion. And the current block height is 942,342. That's where we currently are, guys. Just keep chugging along, keep stacking the Bitcoin, keep accumulating the coin. All right. So as you guys are funny, dude. All right. We got multiple ones. Okay. I'll do a little chart boy before I dunk on Peter Schiff here. Let me pull up my chart. Let me show you what I'm watching. Let me show you what magic lines I've drawn. Okay, here is the Bitcoin price on the dollar. Again, I use this, you'll see here, Bitcoin. Oh, well, let me zoom in. Bitcoin / US dollar crypto on TradingView. I'm almost positive, I haven't been able to confirm this, but I'm pretty sure this is a composite of all of the different exchanges and all the Bitcoin charts combined into one. That's why I like to use this one. Maybe that's a hack you guys want to use. Usually a lot of people like the Bitstamp one because it's the longest one, but they don't have that much volume, or they go use the Coinbase one because it does have a lot of volume. But I've really liked this Bitcoin / US dollar crypto one on TradingView. And this is what I'm watching. So, of course, we all know here is the 24 high. We totally didn't hold on that. And then this red range is kind of the 2021 high where we trended through. So that's what I got. And then here is, the bottom line, that 60K drop. This line again is the 2021 top. And then the 2024 top is, it's a little messy right now. But what I am watching, which is interesting, and watch, this is not going to hold up, but it has been holding up for the last couple of weeks, is this trend line, guys. Check it out. I was showing Luke this morning. My trend line's intact, and further, it is being held up, at least as of now, on the 50-day moving average. This trend line holds up, boys. I don't know. All I'm saying is I don't know. Okay, that's what my charts look like right now. It's a little messy. Might as well add the moon phase. Yeah, dude, I should add whole moon, full moon. I joke with one of my friends, and then we'll talk about Peter Schiff. I joke with one of my friends. I have a couple of Bitcoin friends. We have a group chat. It's just three of us, and we always joke with them like, "Yo, bro, what's the astrology TA on Bitcoin? Literally, like, what is astrology telling us so that we can make up some shit about the Bitcoin price and make up some narratives?" So I literally, I don't just troll with TA. I literally troll with astrology to make sense of the Bitcoin price. But in reality, we look at supply demand economics. As I made the case in the first segment, we're looking at who's selling and who's buying, and are they really buying, and how much liquidity is in the system, how much interest is in the system, or rather how much interest is in Bitcoin. That's what we watch. That's what we really watch. But you guys know, actually, Q said it best yesterday. I can probably do with a little less fun. So to me, it's just fun. TA is just kind of fun. trolling my friends about astrology, Bitcoin price movements. I think it's kind of fun, but hey, you know, I know you guys don't like to have any fun. I know the fun police are in the chat, and I got to be super stoic and, you know, serious and wear a suit or else you don't take me seriously or whatever. But we have fun here, guys. You guys know when I'm here, we have fun. All right. Anyways, let's watch this, Peter. Let's watch Peter Schiff's latest pivot. It's a short clip. It really doesn't even make sense to me, but when we can dunk on our boy, when we can dunk on Unc, the hard money game about Bitcoin versus gold, I always take it. So here's the short clip.
The real threat to Bitcoin now isn't all the shit coins. It's tokenized gold. Because tokenized gold does everything that Bitcoin is supposed to do, but can't. And everything that Bitcoin can do, tokenized gold does better.
Bruh. Bruh. Okay, let me try to mentally recap all of Peter Schiff's pivots. We had in the early days, you know, Bitcoin is trash. It's never going to catch on. And then we had gold is a much better Bitcoin than Bitcoin. This is why you need physical gold. And then we got to, you know, Peter Schiff doing his victory lap last year because gold had a run up. And see, hey, Bitcoin failed. He always does the Bitcoin fails every time Bitcoin goes down and gold doesn't go down as much. And now because we're starting to see the Wall Street phase of shitcoining and tokenizing all the things. And I don't know if you saw the SEC chair, Paul Atkins, said that within 2 years, all the things are going to be on the blockchain. Everything's going to be tokenized. We have Peter Schiff now saying, wait, no. It's not physical gold that's going to beat Bitcoin. It's tokenized gold that's going to beat Bitcoin. It's actually better Bitcoin than Bitcoin. Tokenizing the gold is actually better Bitcoin than Bitcoin. And my first initial thought when I saw this was like, what? Like, he's basically just saying like dollars? Like, he's just saying dollars are going to be Bitcoin? Like, wait, paper gold is going to be Bitcoin? Or rather, digital paper? It's going to be Bitcoin. Man, this is what happens when you have Bitcoin derangement syndrome, or at least publicly. I truly believe that Peter Schiff is a Bitcoiner. I think in private, he's a Bitcoiner. I'm pretty sure he owns Bitcoin. Remember the whole theater between his son and him where his son was a Bitcoiner and then he did an AI pivot and he's the gold bug. And he's like, you don't have any experience, kid. You'll learn one day. And then he, you know, effed off and started doing AI stuff. But now we've gotten to the point where, guys, you better watch out, dude. Your bags are in trouble because tokenized gold is going to take over. Tokenized gold is actually better Bitcoin than gold. Wait, tokenized gold is actually better than digital gold. Wait, is tokenized gold just digital gold? Wait, are they just recreating the system with more complexities because they don't want to own Bitcoin? Does tokenized gold literally just means digital gold? Dude, they just made, oh my goodness. All right, hold on. Let me workshop this live. They just did God's vision of gold. That's blasphemous. Satoshi's vision of gold. This is the true vision. Tokenized gold is the true vision of what gold should be. Tokenized gold is what's going to run the modern economy. It doesn't make any sense to me. This is why I'm trolling it. Like, I don't get how he can seriously say tokenized gold is better Bitcoin than Bitcoin. It literally doesn't make sense to me, guys. Yes, and Family Dia hits the nail on the head. The problem with Peter's argument is that it introduces a counterparty risk. Hey, I help out. That's the whole thing. Dude, Apparently, tokenized gold is better than Bitcoin because if you insert a counterparty in between the physical gold and the digital blockchain representation of gold, it's better than Bitcoin because you can trust humans to audit the gold correctly and not make more gold or digital gold IOUs than the physical gold. You see, dude, it's so much better. Tokenized gold is the new digital gold. It's over, bros. We have been checkmated. Yeah, exactly. My money needs other use cases besides money. Semiconductors need gold. That's why gold is money. We've abandoned that now. Tokenized gold is just better than Bitcoin. Tokenized gold over digital gold. Wait, digital gold does not equal digital gold? Wait, I'm getting confused. He likes the trust me profile. Anyways, as you can see, Peter Schiff, man, love the guy. I think he's right about 99. I think we agree on 99% of everything. It's just that last 1% where it all goes down the drain. Well, you heard it here first, guys. Tokenized gold is going to take over Bitcoin. This is why you should sell your Bitcoin right now, because tokenized gold is coming for Bitcoin's market cap. No, I'm trolling. Accumulate the Bitcoin. I forgot. We can't have fun. We can't have fun on this show. All right, let's keep it moving because I'm just rambling and making jokes about Peter Schiff at this point. I'll be right back.
I want to give a shout out to our partner, Ledn, the leader in Bitcoin-backed loans. Ledn lets you unlock the liquidity in your Bitcoin without ever having to sell it. Since 2018, they've issued over $10 billion in loans to more than 10,000 customers worldwide. I love these guys, and not only do I have an account with them, I also have a loan. And here's what really sets them apart. There are no monthly payments, and you can pay back the loan at any time. Once you send your Bitcoin as collateral, you can have cash in your account within 24 hours. Ledn has over 1,000 five-star customer reviews, and they've never lost a single dollar or single sat of customer funds. So if you want to tap into the wealth of your Bitcoin without having to sell it, head over to learn.ledn.io/simply today, and you'll get 0.25% off your first loan. I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones? They don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY.
Wait. We got a good comment coming from Twitter right here. Francisco goes, nah, just tokenize the tokenized gold and double the digital gold. Dude, it's going up, bro. It is going up. Yes, Peter Schiff will sell anything besides Bitcoin. Schiff creating a new shitcoin for gold. You, Mr. Schiff, are genius. How could I miss that? Just A shitcoin version. Wait. Shitcoins don't threaten Bitcoin. But a shitcoin version of gold is a true threat to Bitcoin. Man, I wish I would have seen that. I wish I would have known. Okay, anyways, let's get into this, guys. So as we've been talking, bro, I don't know. You guys let me know in the chat. Are we tired about talking about the Clarity Act? Are we tired about headlines coming about the Clarity Act? Because I sure am. At this point, I'm like, just get it over with, in the sense that it's just not going to happen. Well, we got a new update, all right? We got a fresh update from the Clarity Act. And there was a lot of hope coming from a lot of people in the industry saying that it's going to happen. It's going to happen. I think they said shortly after Easter. And then it kind of to, well, I forget what the initial date was. It was supposed to happen at the beginning of the year. Hard drive today. It's dying on me. Give me 1 second. Give me 1 second. Oh, snaps. I'm cooked. Wait. No, I'm pixelating. Okay. Well, let me just try to. No, it's not the Wi-Fi, guys. It's not the Wi-Fi. It's my computer. I have so much. I have all the video. I have all the episodes downloaded on my computer. So I'm literally using up my entire computer's memory. And I need to put all that. I need to clear my computer, but I need a hard drive to store all the stuff I got. Okay. Oh man, we're cooked. I'm so cooked. Give me 1 second. Let me try to close some things and delete some stuff. Oh man. Can you guys hear me? Can you hear me at least? All right, let's see. Oh man. Can you hear me? Let me know if you can hear me. No, it's not. No, dude, my computer just cooked. I'm all right. I need to go get a hard drive today. Just let me see if it catches itself. Let me see if it figures its stuff out. Yes, you can hear me? Yes, you can hear me. Okay. All right. Okay, you can hear me. All right. Let me just keep it going, and hopefully hopefully my computer catches up, because it did do this morning. So anyways, we got this. It goes, breaking: Coinbase yet again rejects Senate stablecoin yield compromise. Coinbase pushes back on the Clarity Act draft, warning the proposed rules could limit how stablecoin yields are structured across the industry. The current language bans passive yield while allowing activity-based rewards under a broader, quote, economic equivalent standard. Without Coinbase's backing, the bill faces an uncertain path and could stall indefinitely if not passed by May. So, looking into this a little bit. Oh, man. Okay, here we go. Here is a breakdown from CoinMarket about what actually is happening. So the headline is Coinbase pushes back on stablecoin yield terms in Senate crypto bill. This came out today. Again, this was on the revised Clarity Act with the quote unquote compromise on stablecoin yield. Coinbase very infamously say, hey, we don't want a bad bill, but we're totally willing to come back to the table for a good bill. In particular, the main compromise, or the main sticking point, was the stablecoin rewards or stablecoin yield. Now, Here we go. It goes, a proposal that circulated earlier this week could have barred third parties, including exchange, from paying stablecoin yields to users. Coinbase told Senate lawmakers Monday that it has concerns over stablecoin yield language in the latest compromise version of the Senate's crypto market structure bill. Citing 4 people briefed on the meeting, the exchange's opposition adds a new obstacle to a bill that has already faced repeated delays. A proposal that circulated earlier this week would have barred third parties, including exchanges, from paying stablecoin yield to users. The provision was framed as a response to banking groups' concerns about deposit flight if customers shifted funds towards yield-bearing stablecoins. Coinbase prior withdrawal of support for an earlier version of the bill in January preceded the Senate Banking Committee's indefinite postponement of a markup vote. Republican Senator Tom Tillis and Democratic Senator Angela Alsobrooks are leading the current round of negotiations. Alsobrooks said previously that the compromise may leave both the crypto industry and banks dissatisfied. The White House has hosted at least 3 meetings between crypto and banking representatives in an attempt to broker an agreement, but no deal has been reached. Banking groups have argued that stablecoin yield payments by exchanges exploits a gap left by the Genius Act, which prohibited stablecoin issuers from paying yield directly to holders. Stablecoin yields represent a significant revenue stream for crypto exchanges. As I pointed out on the show before, the two sides remain divided in how the provision should be structured, with talks apparently still ongoing. Anyways, to wrap this up, it goes, Republicans are aiming to advance the bill before the midterms, where a shift in Congress could slow or halt its momentum. The House passed its version, the Clarity Act, in July. Coinbase did not respond to a request for comments. So it looks like the Clarity Act is even further stalled again by Coinbase. And we got a good little blurb coming out. Oh my God. Let me see. Am I here? Let me see if it's still streaming. Bruto show, guys. Oh wait, it looks like I'm back. Okay. You're stalling again too. Oh man. Don't tell Nico, he's gonna freak out on me. Oh, let me see. Oh man. Let's see. Let's hope I'm still alive. Sound not good either. Oh man. You're stalling again too. Okay, I'm here. All right, I'm here. Okay, it's still working. Let me get through today. Okay, here is a news and PN midday. Coinbase told Senate offices this week it could not support the latest version of a stablecoin yield compromise. Key senators have been projecting optimism over the last few days about a deal being close. Coinbase killed the last market over yield concerns, and you can hear this crypto exchange. Coinbase told Senate offices this week that it could not support the latest version of a compromise intended to address banks' concern about stablecoin yield. So this is where we are, dude. I'm convinced the stablecoin yield is absolutely now, guys. It's not my it's not my it's my computer's RAM is. Maybe this works better. No, you guys are funny. My back. Yeah, it seems to be. All right, seems to be kind of back. Okay, so you got to remember the main fight here for the clarity. Look, I'm back. Okay, I think I'm back. The main contention over the Clarity Act, which has been stalled, is this idea of stablecoin rewards. Now, stablecoins offer about 3.5% in rewards. When you look at traditional savings accounts and interest on checking accounts, it's like 0.39% or as low as 0.07%. And the download more RAM. And the main kind of, oh my God, I'm cooked. The main contention was the banks are going to lose a lot of deposits. They're going to lose out on a lot of cash if these stablecoin rewards are allowed. At this point, I don't have much hopes for the. Let me close some other tabs. I think the Clarity Act is going off these PC is as high as he is. They're both cooked today. Oh man, brutal. Okay, anyway. Let me just keep this moving. Let's move in. I'm gonna possible because I'm cooked. So let's see if this transition. Bro, did it work? No.
I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at HIVE Digital Tech or at HIVEDigitalTech.com.